Welcome to the Economist in Your Ear podcast. Today we're unzipping a fascinating situation in the business world, one that's really sparking conversations about brand identity, consumer evolution, and, well, the tricky art of reinvention.
We're talking about Victoria's Secret, right?
Exactly. A brand that's been, a cultural icon for decades and now finds itself at this really pivotal crossroads.
Yeah.
We recently came across a compelling article from The Economist that really lays out some of the challenges Victoria's Secret is currently grappling with.
It paints a pretty vivid picture, doesn't it? Pressure from multiple directions.
It really does, from the boardroom right down to its customer base. But as always, we want to go beyond just the surface of what's happening to truly understand the nuanced forces at play and what this all means for such a major brand trying to find its footing in, well, a rapidly changing world.
That's right. And when you look closely, at the full spectrum of information that's available, it quickly becomes clear that while The Economist rightly identifies many of the struggles,
there's a deeper, maybe more subtle story here, especially when it comes to truly understanding today's consumer and the profound shifts in the market itself.
So it's not just what is happening.
Exactly. We're going to explore not just what is happening at Victoria's Secret, but crucially, why it's proving so challenging for them to navigate these waters.
And maybe what some more effective ways forward might look like.
Right, perhaps even some counterintuitive ones.
Okay, so let's start where The Economist began its analysis. The core arguments about where Victoria's Secret is currently struggling. What were those big headlines they highlighted first?
Well, the very first point of pressure they identified, and it was pretty dramatic, was an investor revolt.
Oh, right.
We're talking about activist shareholders like Barrington Capital. They hold a smaller but definitely vocal stake.
Okay.
And BBRC International, they got a more substantial chunk, maybe about 13% of the shares.
Wow, okay. And both are publicly accusing the board of what they're calling disastrous decisions, and, well, they're demanding new leadership. It's a pretty public and aggressive spat.
And how's management responding to that? Are they just sort of sitting back?
Not at all. The Economist details their defense strategy. They've deployed what's known as a poison pill plan.
A poison pill. Explain that a bit.
Sure. For anyone unfamiliar, a poison pill is basically a tactic used by a company's board to prevent or at least discourage a hostile takeover.
Right.
Essentially, it would dilute the ownership stake of existing shareholders if any single entity acquires more than, say, 15% of the company's stock.
Making it less attractive for an activist to build a controlling interest.
Exactly. It's a clear signal they intend to maintain control, not just roll over.
Fascinating stuff.
Yeah.
Okay, beyond the boardroom battles, where else did The Economist pinpoint Victoria's Secret struggles? What was next?
Secondly, they really honed in on what they describe as a massive brand identity crisis.
Which feels pretty central, doesn't it?
Oh, absolutely. For years, as you know, Victoria's Secret was basically synonymous with its iconic Angels runway shows.
Those huge spectacles.
Right, those elaborate shows featuring those, perfected, almost otherworldly models. The article reminds us how that image became kind of emblematic of significant issues in the fashion industry.
Especially post-#MeToo.
Exactly. Especially after the #MeToo movement gained momentum. Suddenly, these unholy tales of starvation and abuse from those very angels started to surface.
Which cast a very dark shadow.
A very dark shadow over the brand's glamorous facade, yeah.
And it seems to have spiraled from there, didn't it? It wasn't just the past stories.
Absolutely. The situation got even worse in 2018 when the show's organizer made those, well, hugely controversial statements.
Of not featuring certain models.
Right, about never featuring transgender or, quote, fat models. This directly led to the show's cancellation the following year in 2019.
A huge blow.
Massive. Now, they have, of course, tried to pivot since then. They've shifted to what they describe as comfort-first inclusivity.
So what does that look like in practice?
Well, their shops now sell comfortable pajamas alongside the more traditional, elaborate push-up bras.
Okay.
And the fashion show even came back last year, featuring more diverse models.
But has it worked? What do the numbers say?
Well, here's the stark reality from the numbers. Despite all these changes, sales have slid. They peaked at $7.8 billion in 2016.
And now?
Now they're down to $6.2 billion in 2024. And maybe even more telling, their market value has fallen by more than half since its 2021 spinoff. It's now sitting at just $1.5 billion.
Ouch. Okay, so investor revolt, identity crisis.
Yeah.
What was the third major challenge The Economist highlighted?
That would be the relentless competitive squeeze. This is where you see the really dramatic rise of these new agile digital native competitors.
The online brands.
Exactly. Names like Skims, co-founded by Kim Kardashian, of course.
Right.
Savage x Fenty by Rihanna. And Aerie from American Eagle. All of these brands have just quickly carved out significant market share.
And they've done it differently, haven't they?
Totally. They found success by kind of marrying comfort, body positivity, and a strong sense of celebrity cachet in ways Victoria's Secret really struggled to.
And Skims' valuation is huge.
Right. Staggering. Skims boasts an impressive valuation of $4 billion on less than $1 billion in sales. That figure alone just showcases how successful these new players have been at capturing the evolving consumer.
It really sounds like Victoria's Secret is caught between a rock and a hard place. The Economist then hints at, well, two opposing cures for their woes. What are those proposed solutions? How do they frame the dilemma?
It sets up this classic binary choice, doesn't it? Like you have to go one way or the other.
Leaves like it.
On one side, you have those activist investors like Barrington pushing for this nostalgic return to the Angels era glamour.
Bring back the fantasy.
Basically, yeah. Bring back the Angels, focus on bras. Then on the other side, you have management, specifically the CEO, Hillary Super, talking about moving into new areas like wellness and fitness.
And focusing on younger consumers.
Right, prioritizing decoding the desires of younger consumers like Gen Z. So it's painted as this battle between, clinging to the past versus embracing a somewhat vague, future-focused expansion.
That binary choice does seem almost too simplistic, doesn't it?
Yeah.
When we start digging deeper into the numbers in the broader market context, it feels like a far more complex picture emerges. It's not just past versus future.
Absolutely. It's much more nuanced. The first insight, and I think it's a crucial one, is that while sales are indeed down significantly from that 2016 peak, the Q1 2025 net sales figure, $1.35 billion, was actually only down 4% year over year.
Only 4%. That's less dramatic than the overall drop.
Right. And interestingly, that figure was even slightly above their own guidance. So this suggests maybe a degree of stabilization, not a complete free fall.
Okay, so not great, but maybe not a death spiral.
Exactly. It's not a triumphant return, but it's certainly not the disaster the headline numbers might imply.
Yeah.
Of course, you look at the share price.
Which is way down.
Yeah, currently around $18, a huge drop from $46 on its spin-off day in 2021. That's roughly a 60% total return loss.
Which obviously fuels the activist anger.
Absolutely. It fuels the rhetoric and their frustration. But it's not just about top-line sales either.
You mentioned other financial markers tell a different story, too. What else is critical here?
Well, there's a very clear margin health issue. Their revenue, while maybe stabilizing a bit, is increasingly promotional-driven. They're selling stuff, but often on sale.
So they lift units sold, but...
But it's compressing their gross margins significantly. It went from a pretty healthy 35% back in 2016 down to just 26% in fiscal year 2024.
That's a big drop. What does that indicate?
It indicates chronic discounting, which, truly undermines any claim of being a premium brand.
Right. Hard to command high prices when everyone waits for the sale.
Exactly. Your customers just get trained to wait.
And beyond their own financials, the market itself has just shifted dramatically, hasn't it?
This is a major insight that honestly can't be overstated. The market context has undergone this profound structural shift.
In what way?
U.S. bra buyers now overwhelmingly prioritize wireless comfort. A staggering 80% say they never wear push-up bras.
Wow, 80%.
Yeah, this isn't just a trend. It's a fundamental move away from Victoria's Secret's historic, flagship product.
So you can't just wish consumers back to a product they don't really want anymore.
Precisely. The demand has fundamentally changed.
Okay, so given these shifts, that idea of a go back to Angels nostalgia, which the article discusses, it seems, problematic. Is that truly what Gen Z desires?
That's such a critical question, isn't it? And the data suggests no. Surveys consistently show Gen Z is the most purpose-driven cohort out there.
Meaning they care about brand values?
Deeply. They tend to punish brands they see as inauthentic or objectifying. So the insight here is that a return to that perfected body fantasy, like the Angels, could actually deepen the relevance gap for Victoria's Secret, not solve it.
So it's a fundamental mismatch with Gen Z values.
Absolutely. They're looking for brands that reflect their own values, their reality, not just some unattainable, airbrushed image.
Okay, and what about the flip side? The assumption that their pivot to inclusivity, which they did attempt, simply failed, just because sales still fell. That seems like a pretty broad conclusion.
It does, and the nuance here is crucial. It might not be that the idea of inclusivity failed, but rather the execution.
How so?
Well, the key insight, I think, is that when a legacy brand tries to pivot towards something like inclusivity, it has to be really authentic and comprehensive, not just performative.
And critics felt it wasn't.
Right. Critics, for example, called the 2024 Inclusive Show tokenistic and maybe a bit half-hearted.
So inclusivity wasn't necessarily the wrong path.
Exactly. But perhaps it wasn't done authentically enough to truly resonate, to really shift perception in a meaningful way. It felt maybe more like a checklist exercise than a genuine shift in their core DNA.
Interesting. Okay, another suggestion from the article, this one via an analyst, Simeon Siegel, was basically raise prices, drop the promo shoppers.
On the surface, that sounds like a straightforward way to regain premium status, right? But what's the nuance there?
Yeah, it sounds logical, but it's a tricky one. And this is where the data becomes really critical.
Okay.
The insight is that Victoria's Secret's traffic, their customer base, is already quite promo-elastic.
Meaning they're very sensitive to discounts.
Very sensitive. So trying to hike prices without a fundamental product rethink or without a much stronger differentiated value proposition
Risks losing those customers.
Exactly. It risks accelerating market share loss to more pocket-friendly newcomers, like Parade, for instance. You can't just raise prices if your core offering isn't perceived as premium or unique enough anymore.
You'd risk alienating your existing base without attracting new, higher-paying ones.
Precisely. It's a dangerous gamble without fixing the core product and brand perception first. And the article even linked Gen Z's supposedly lower sexual activity to a lower lingerie appetite. Is that really a direct correlation, or is there maybe a different understanding of lingerie for this generation?
Yeah, that felt like a bit of a leap, didn't it? And potentially misinterprets Gen Z's relationship with intimate apparel altogether.
How so?
The insight here, I think, is that lingerie for Gen Z is increasingly framed as self-expression and comfort.
Not just for seduction.
Right. Comfort and aesthetics matter significantly more than solely, sexual utility. And the bra market itself is shifting rapidly towards bralettes shapewear.
Which is exactly where competitors like Skims are winning.
Exactly. It's about how the product makes you feel, how it fits your lifestyle, not just about who might see it or for what traditional purpose. It's much more of an internal experience, not just an external display.
So it really sounds like there are several, maybe strategic blind spots the original article didn't fully explore when looking at Victoria's Secret's challenges and potential future. Can you lay out some of those overlooked areas?
Yeah, exactly. One major blind spot, I think, is the digital first versus mall-bound issue.
A reliance on physical stores.
Hugely. The true Achilles heel for Victoria's Secret isn't just the new competitors, it's their own kind of outdated retail DNA. I mean, imagine trying to win a digital race with a predominantly mall-bound business model.
Doesn't work so well.
Right. That's Victoria's Secret, still deriving over 75% of its sales from physical stores. Meanwhile, competitors like Skims and Savage X Fenty,
they're built differently.
Completely. Built on high-margin direct-to-consumer DTC channels. They sell directly to you online, cutting out the middleman.
And they use data differently, too.
Yeah, leveraging data-driven drop models that create buzz and scarcity. It's a totally different retail strategy, one built for the modern consumer, not the mall shopper of the 90s.
Okay, what other blind spots are they potentially missing?
Well, then there's sustainability. This is huge for Gen Z.
Ethical consumption.
Right. Something like 44% of them are identified as purpose-driven buyers. The insight is that supply chain transparency, using recycled fabrics, having a clear ESG, environmental, social governance strategy.
These aren't optional anymore.
Not for a modern brand trying to connect with this generation, no. These are basically non-negotiables, not just, nice-to-haves for a press release.
Makes sense. Anything else?
We also see a pretty significant lag in product fit technology.
Fit is notoriously hard with bras.
Exactly. Poor fit drives the industry's highest return rates, which just eats into profits. And while startups are deploying advanced AI sizing solutions to try and minimize this,
Victoria's Secret is behind.
Their digital fitting tools seem to lag competitors, which significantly undercuts any ambition to be premium or command higher prices, or even just satisfy customers. If you can't get the basic fit right easily, online especially, your brand suffers.
And finally, what about the leadership and governance itself?
Yeah, the governance optics are, I think, another major blind spot. Deploying a poison pill plan, especially when the board is already under activist siege.
It looks defensive.
It really does. It exacerbates the perception that leadership is reactive and just trying to entrench itself, rather than proactively addressing the issues.
Whereas best practice would be different.
Well, the insight here is that best practice turnarounds, think about what happened with Levi's, for example. They often paired fresh boards with a sort of founder-friendly brand revitalization. It felt collaborative.
A stark contrast to what looks like a defensive posture here.
A very stark contrast, yeah. This looks more like digging in than transforming.
Okay, so if go back to angels isn't the answer, and a sort of half-hearted pivot to inclusivity isn't quite hitting the mark either, what could a data-driven reboot actually look like for Victoria's Secret? What's that nuanced middle path for authentic reinvention?
This is where I think the truly authentic reinvention emerges. It's not about choosing one extreme or the other, but about deeply understanding and responding to the new landscape.
So, starting with the products, the assortment.
Right. First, on assortment. The strategic insight here is to double down on wireless bras, adaptive fit bras, and shapewear.
Because that's where the market is growing.
Exactly. These are the fastest growing segments. And it means leveraging the Pink brand's existing comfort equity rather than trying to somehow resurrect push-up bras, which are just declining in relevance.
Meeting the consumer where they are now.
Precisely. Not where you wish they were, or where they used to be.
And how would their brand voice need to change to match that product shift?
Well, for their brand voice, the insight is that instead of relying on those legacy supermodels, it means co-creating. Like be capsule lines with body-positive icons, emerging creators.
People who resonate more now.
Exactly. Think collaboration culture instead of catwalk culture, where authenticity and relatability are absolutely key. It's about genuine connection, not just distant, aspirational fantasy.
Okay, what about their retail presence? You mentioned they're still so mall-dependent. What's the strategy there?
Precisely. For their channel mix. Strategically, it probably means closing marginal physical stores, the ones that are just a drag on profits.
And reinvesting that money?
Reinvesting heavily in immersive e-commerce experiences, making their online presence much stronger, much more engaging. And it also means expanding into third-party online marketplaces, especially abroad.
To capture growth where building stores is slow or too expensive?
Right. The future is overwhelmingly online, and they really need to catch up. Rapidly.
And the ethical consumer we talked about earlier, how do they address that?
For ESG and transparency, this can't just be a bolt-on corporate social responsibility thing.
It has to be integrated.
Exactly. It's about integrating conscious comfort right into their marketing. Publishing science-based emissions targets, maybe having a fabric traceability dashboard readily available for consumers who care about that.
Showing genuine commitment, not just PR.
Right. This builds trust, especially with a purpose-driven generation. And then finally, there's investor alignment.
Getting the activists on board. Or at least calming things down.
Maybe. Instead of stonewalling, the insight is they could try to involve activists. Perhaps offer them a say in a new sustainability committee or an innovation committee.
And tying compensation to results.
Yeah, linking executive compensation to metrics like return on invested capital, ROIC, basically how efficiently they use money, and also to KPIs, key performance indicators, that actually measure brand strength and customer satisfaction.
That aligns everyone towards long-term value.
Exactly. It aligns horizons and shows a real commitment to long-term value creation, not just short-term fixes.
It really sounds like it's about marrying authentic, comfort-led innovation with genuine digital fluency and transparent governance. It's a complete overhaul of how they approach their business, isn't it? From product to perception.
It really is not just a superficial rebrand. It's about a deep structural shift rather than just tweaking around the edges. And it's fundamentally about building a brand that truly understands and, frankly, respects the modern consumer.
This has been such an illuminating conversation about Victoria's Secret. It really highlights how a legacy brand, even one as iconic as this one was, can find itself caught between this evolving consumer landscape and these intense internal pressures that demand some kind of dramatic response.
Indeed. And The Economist rightly points out that tug of war between, impatient shareholders and these uncertain consumers, but that implied binary choice.
Go back to the angels or
Right.
chase lifestyle expansion.
Right. That binary really misses this crucial middle path we've been talking about. It's about authentic innovation real digital savvy and clear ethical governance that genuinely resonates with today's consumers.
And until Victoria's Secret masters that triad innovation, digital governance, it might keep selling lots of bras, as the article noted.
Sure, they still sell a lot.
But perhaps not the story that investors, or crucially Gen Z, truly want to buy into. And that seems like the big question for them, and maybe for any legacy brand navigating today's complex market.
Absolutely. So the provocative thought maybe we can leave you, the listener, with is this. How many other beloved brands, in their own struggles for reinvention, are maybe overlooking this authentic, data-driven middle ground?
Are they choosing an outdated playbook instead? Or maybe just a superficial rebrand?
Exactly. What does true transformation really look like in an era where consumers value purpose and transparency just as much, if not more, than the product itself?
Plenty to consider there. Thanks so much for joining us for this exploration. We hope this is giving you plenty to think about.